Welcome to the Dubai Startup Ecosystem Chats, powered by Dubai Chamber of Digital Economy. I'm your host, Erica, and it is my absolute pleasure today to be sitting across from Muhammed Yesilhark, the Chief Investment Officer at NOIA Capital. Welcome.
Thank you very much, Erica. Pleasure being here.
I'm very excited to sit across from you, Muhammed, because you seem to be an investor through and through. You've had experiences at managing a hedge fund. You've been at another investment firm which seems to invest in more crypto and DeFi projects. And now you are at NOIA Capital, which is a European family office with a base here in Dubai.
That's correct, yes.
Tell me a little bit about the different investor profiles of this, because we have a perception, I think around the world, but definitely in Dubai, that family office investments are much more traditional. Is that changing? And how is it different from being a hedge fund investor versus a, DeFi, crypto, or even venture capital investor?
Yeah, thank you so much, Erica, and it's a pleasure being here. The world is changing rapidly, and all of these things, while all being in investing, are completely different to each other. The interesting thing that I would say that immediately points out is even within the family office space or within the hedge fund space, you can't take that and then look for firms that have very, very similar traits. Why? Because I looked at that like it's a bit like saying vegetables, right? You have everything from a mushroom to celery, right? One is green, one is brown, right? And one might be round, the other one might be lengthy and long, right? So it's exactly like that. Within hedge fund space, you have all sorts of different types looking at different strategies that you can't compare to each other, where even the skill you can't transfer to each other, right? A statistical arbitrage fund that is primarily employing quants, which are computer nerds, basically, you can't transfer that to an equity long short manager that is doing fundamental arbitrage, for example, right? It's a completely different skill set, even within the hedge fund world.
Fair. Let me take a step back for a second, because there's a lot of audience out there that are startup founders and they've never met a hedge fund manager before. What is a hedge fund investor? What do you guys invest in as a hedge fund? I know you're no longer there, but explain to us what a hedge fund manager does and how it's different from traditional banking investments or venture capital or even family office investments.
So on the hedge fund side, and again, within the hedge funds, you need to look at the differentiation of the categories within that. On the public market side of hedge funds, meaning hedge funds that are focused on the stock market, on the public side of things, they are generally focused on arbitrages, generally focused on running strategies that general long-only firms, meaning normal fund investors that are like the Fidelities of this world and the BlackRocks, etc. of this world, that generally are just invested. They are just long the equity markets. Hedge funds are generally trying to be different. They're trying to be absolute return, and they're trying to be much more focused on getting some sort of strategy, applying some sort of strategy to make sure that they can make money in good and in bad markets, basically. So, but the way you have to think of it is that there is a huge pool of capital, and then there is certain people that are the risk takers, the front office guys that are the risk takers, and those guys are the ones that are actually, I would almost say, playing the computer game, meaning they're in front of their Bloomberg terminals, and according to their own strategy, they buy, they sell, they go long, they go short, etc. And that the end result of that is a certain amount, a return that then gets distributed to the shareholders, basically to the investors.
Fair enough. So it does sound like that show Billions gives a pretty good example of what a hedge fund does.
You mention it, and I'm not sure, full disclosure, we haven't discussed about this before. I actually worked for Steve Cohen for Billions, basically.
Oh, wow.
Yeah, so I was 5 years in his London office, because the Billions show is about Steve Cohen, the legendary investor behind SAC and now called Point72. And after my 4 or 5 years at York Capital, I got hired into SAC's London office as one of the partner and portfolio managers. And I was actually the youngest portfolio manager in the London office. Wow. So I was working in running Steve's money, managing Steve's wealth, basically.
And what, if you look back to that time, what was your biggest takeaway or learning that you took away from Steve?
So the most important learning I would say that I took away there was that he always used to say, it's not a sprint, it's a marathon. So investing is not a sprint, right? The vast majority of retail investors and other people that are involved in markets, they always try to hit it big, basically. They always try to do something where they can make this 20x, 50x, 100x return and then retire, basically, right? In Turkish, I'm originally Turkish, there is even a saying that says, are you playing in the stock market? Oynuyor musun? Which is a complete mischaracterization of a very serious profession. Basically, the stock market is not a playing ground, right? And if you think you can just do it part-time and you think you can just read a few articles and then be this legendary investor, you're very mistaken, basically, because it's exactly like any other sport. Unless you're on an athlete level, you will not sustainably be able to generate returns, basically.
And this is why Warren Buffett and so many sort of professional investors say, actually, the majority of professional investors are not very good at playing the game either. It's such a difficult game. I think numbers are above 80% of normal fund managers basically don't hit that 6 to 8% annual growth target, which you could hit potentially by just investing in ETFs and the S&P 500 and whatnot. And so I know Warren Buffett has always instructed people, if you're a part-time investor, make sure with your own money you're investing in exchange-traded funds or index funds.
That's correct. Yes, that's definitely a wise recommendation, and which is why he was so famous and big to convince people to just buy Berkshire stock.
So if you're open to discussing it, I've never sat across from a former hedge fund manager. I'm curious, what was your biggest year in terms of hitting it out of the park, I suppose you could say? And what was your biggest loss where you thought, gosh, did you ever have a moment where you thought, I'm going to lose my job? I just lost $50 million.
I mean, I think I had plenty of both, basically.
Really?
Yeah, of course, because in the way you run in hedge funds, obviously you're always running capital extremely conservatively. Like you're running it in a way, because it's all institutional investors and that are giving you that portion of their capital that they're not willing to lose. And because generally in hedge funds, the vast majority of the capital that the fund managers themselves have, their liquid wealth is also invested in the fund. So generally it's run extremely conservatively. So while you might have a big loss on a single position, you might be invested in a company that has a profit warning and the stock drops 50, 60, 30, 40% on the day, which is obviously a disaster. Generally the portfolios are always structured in a way that you can't, it's very unlikely that you will have a minus 30, minus 40% annual performance on the capital, because the primary goal is always capital preservation rather than actually trying to make some outsized return, right? So while I had plenty of these things where you have an investment that you're convinced about and it blows up in your face, we say, right? It humbles you, right? But it doesn't necessarily immediately mean that year now is a minus 20% year and you've destroyed the book, right? It generally means then you get into your little hole, then maybe you were up 4% for the year, now you're up only 1% for the year, and then you try to grind up again to get that performance back from many other investments that you try to get right, basically. Right? So generally that's how it works, I would say.
And do you recall a single day where you lost, can you give me a number where you're like, yeah, I lost $100 million in a day?
No, I don't. I don't remember any amount like that. That would be a very large amount. Although I was running quite large money in my role after SAC. I became the head of European equities at Carmignac, which is a continental European fund. And because I was the head of Europe there, I was responsible for around 4 to 5 billion euros of capital that was invested in the European markets. So we did, our portfolio did move 20, 30, 50, 100 million a day, basically. But I don't remember specifically there that we had one position that put us 100 million back, basically.
Okay. Not too many bad days then.
I know, I'm sure we had a lot of bad days, but it's probably more that we got 5 ideas wrong than just one idea completely wrong. I remember one thing that was like really sits in my brain like yesterday. At SAC, when I was running in the portfolios at SAC in the London office, I was short a company called Autonomy, which didn't work in our portfolio. You know, short means that you make money as the stock goes down, right?
If they're failing as a company,
or just the stock goes down. It doesn't
Okay.
mean they need to be failing. You know, good companies can also be, the stocks can go down for a period, even for good companies. And that short wasn't working. The stock was keeping on going up, and I was getting frustrated with the position. And so I asked my trader, and I said, like, do you know what's going on? And she said, no, I don't. Like, on that specific day, it was up another 2 or 3% on the day, while the markets were relatively flat. So I got so frustrated, I just closed the short. So I took my loss, basically, and I said, enough is enough. I don't want to lose more on this position. And I took the loss by closing the short. Within 48 hours, it got taken over by HP at a 68% premium to that stock price. So Hewlett-Packard came and paid another 70% almost on top of. If I would have had that stock not covered, that's definitely a situation where the risk manager and everybody else in the firm gives you a call and says, like, what are you doing? Like, why are you short something that's getting taken over? And funnily enough, actually, within years of the takeover, the company, the HP, had to write down the whole investment. It's one of the biggest corporate scandals that are out there. The whole of the board of HP lost their job. Everybody involved in the transaction got fired. The company got written down to zero. And now, mysteriously, the CEO and founder back then was charged with fraud and all these kind of things, etc. He didn't go to jail. He got indicted. But then a couple of, I think less than a year ago, off the coast of Italy, his boat sank, and him and his whole family passed away. And there are still conspiracy theories going around of what that happened and why that happened, etc. But it was one of those things where I was just so glad I had taken a decision to actually stop a loss-making investment, basically.
And years later, with all of this conspiracy, there's a part of you that's saying, I knew it.
I'm not saying that, but I know, obviously, the fact that HP was wrong on that acquisition, that made me feel that our investment process still works, basically. While we can be wrong on the short side, on the short term, we just realized that fundamentally we still knew what we were doing, basically, right? Which, unfortunately, doesn't pay the bills always, right? So you have to be knowing what you're doing and be right at the same time. So,
Muhammed, you've had experience, obviously, growing up in Germany, then working in London, then obviously managing a number of funds across Europe, and then you came to Dubai. What drew you to Dubai?
So I lived half my. I was born in Germany, like you said. Grew up half my life in Germany and then in the UK, and came to Dubai in 2017. Main reason being, I'll be honest, was that there is a ruling that's now been abolished in the UK called the non-dom res taxation scheme, basically, which is a taxation scheme for non-domiciled people that are resident in the UK. So people like me who have a German passport, Italian passport, whatever, non-UK passport, who still would live in the UK and make a living in the UK. So they would be taxed only on the income that they make in the UK and not on worldwide income, basically. So I was on the 15, and that's only allowed for 15 out of 20 tax years. So I was on the 15th year, and I had to make a decision: do I stay in the UK and now pay tax on global income, or do I actually move away? And back then, you could move away for 5 years and then come back, and the clock would start from scratch. That was really the logic behind it. Came to Dubai, call it my home now, and I would never move anywhere else, basically. In fact, I just came back from the US and for a 12-day trip. And from day 8 onwards, I was like, I just need to go back.
I love this.
This place grows on you, I can tell you that.
It does grow on you. As someone who's been here for 16 years, I'm a little bit surprised myself. But every year, I just find new parts of the city to fall in love with. So it sounds like your initial plan was to come here and then within 5 years go back to London. I want to ask you, why? How did you fall in love with Dubai? What is it about this city that's grasped you?
Honestly, it's a combination of so many different things, right? First, I think the fact that as a Muslim, you can really live your faith in this city without being judged, basically, right? Judged by either looks or people or even your schedule of your work schedule, etc. Right? So that's point number one. Secondly, the safety and how quickly my children, I have two children, a son and a daughter, how quickly they actually adapted to the city. You know, immediately they made friends from, you know, so many different countries and it felt like home for them, basically, right? Although both of them were born in the UK, in London. And then also the wife, right? We say happy wife, happy life, basically. So she was quite happy. She's still very, very happy here. And those things in combination where you realize you don't really need to cut back on anything. You know, you have the now, especially after what's happened since COVID and people realize that they can work from anywhere, and Dubai has really, really upped its game in attracting the best of in the world. It's just now you don't have to cut back on anything. You don't have to say, oh, I want to be in the best echelon of finance, so I need to go to New York or to London. No, you have that in Dubai now, basically, right? More than 50 hedge funds have moved over to the DIFC. You know, it's all present here, right? When it comes to entrepreneurs, when it comes to scientists, when it comes to all sorts of other thinkers, authors, writers, whatever you name it, you now have people from all walks of life that are calling Dubai their home. And that, I think, that quality of people that have arrived over the last decade, I think that was the main reason that you just say, because that's what makes a city special, right? At the end of the day, right? It's the people, right? So, and in the old days, I've been coming to Dubai since 2003. It's quite funny, actually. I have a funny story if you're interested. In 2003, I got married, and we got married in December. So it was cold and snowy and rainy in Germany when we got married. So my wife and myself, we just took our wedding dresses with us. And we stayed at a hotel close to the airport because that's all I could afford back then. And then we walked out from the hotel, dressed fully without friends, and we had hired a guy to make us wedding pictures. So then we came to Dubai to make wedding pictures in the sun, basically on the beach, etc. But you have to imagine the looks we got as we were leaving the hotel because people thought we were getting married without friends, basically, right? There was like literally no one else.
And just getting into a taxi.
Just getting out of the hotel, getting into a taxi, and everyone's looking at us like, what is going on here, basically?
I love that. So you have a history with the city.
Yes, I do. Yeah.
It's been growing on you little by little. Let's talk about NOIA Capital. Let's talk about your role as Chief Investment Officer and what it is that NOIA invests in.
Yeah, so NOIA has 4 verticals. We're a multifamily office, and everything about us is odd. Because family offices, like you mentioned before, are focused on capital preservation. We are actually focused on growth. Why? The 2 principles of NOIA, my partner Jerome and myself, we are 40 and 45 years old. Generally, family offices have one patriarch that's generally in his 70s or late 60s or even 80s. So he just wants to keep the capital to then pass it on to the next generation. In our case, we want to keep the capital, obviously. Everybody likes their capital, but we're happy to take enough risk to see if we can compound the capital, basically, right? So that's why we're actually odd in a sense that we are a multifamily office focused on growth. And then the other odd thing about us is that generally when you say multifamily office, the internal capital base of the manager is generally very small because there's multiple families that are invested in the structure. In our case, while we are a multifamily office, almost 80% of our capital is internal capital. So that gives us real strength, basically, of basically saying, look, primarily we manage our own money. And then we have the same services where people want to invest alongside us across our 4 verticals for other families. And we have almost 200 families now that are investing with us. Wow. But mostly in the Benelux region in Europe, so Belgium, Netherlands, and Luxembourg, as well as now more and more in the UAE.
Okay, and when did you set up your UAE office?
We set up the UAE office in 2019. We set up NOIA. 2021, we set up the UAE office.
And how has it been? Because I think you're registered with DIFC.
Correct.
And you have DFSA oversight.
Correct.
How has that structure been and compared to Luxembourg or other places where you've been set up before?
Yeah. So we're extremely, extremely happy with the DFSA and the DIFC. Not only are they very thoughtful in their approach to see, how to regulate us, etc. But also they are extremely fast for anything you require from them from a regulatory perspective, as long as you have your own ducks in order. Right? They're very harsh. Like they want to see that you know what the requirements are and that you have made sure that you are fulfilling those requirements. But once you do that, they are, in our experience, they have never been the bottleneck to us, basically, right? And we've already had to deal with them twice, because we once dealt with them because we acquired another company. That's how we got into the DIFC, basically, by acquiring a regulated entity. And then secondly, we had to then change our regulatory license and upgrade it to a full-fledged fund management license, basically, which is called 3C. And in both these circumstances, we can only have great things to say about both the DIFC and the DFSA, meaning the regulator as well as the free zone.
Beautiful. One of the verticals you mentioned that you're investing in is sort of direct investments, I think you call it, in venture capital, basically. You're investing in startup founders, I assume mostly tech and digital economy players. Can you talk a little bit more about that and what you could see the future family office's role in investing in startups?
Yeah, so that's correct. Under the direct deal vertical, we do invest in startups as well, although our focus is more in the 30 to 100 million range, meaning post-revenue businesses. So we rather focus on people, not just that they have a deck and a slide deck and a team, but actually a bit more than an idea, a bit more traction that we can put our heads around, basically, right? Now, the most important question we ask ourselves all the time is, why is this investment on our desk? Basically, why did it land with us? Because we can't compete with the large scale VC firms, and we don't want to compete with the late stage growth private equity firms either, right? We need to think of, why is something landing on our desk, basically, and that for us, we have to answer in various ways. Sometimes people want to have exposure to European families. They are US businesses and they would like to diversify their capital base, and they love the fact that we have a very strong Benelux culture where, I don't know how much you know about it, but there is a lot of wealth in the Benelux region in continental Europe, because Belgium is one of 8 countries with no capital gains tax. So that's why, a lot of wealthy French, wealthy Italian, wealthy Dutch, etc. are based or resident in Belgium, basically. So they want to sometimes tap into that, and that's why they come to us. But that's the main question we ask ourselves. Why are we having a chance to look at this interesting situation, basically? So therefore, the investments that we make always have some sort of special situations angle to it. Whereas the VC firms or the other growth private equity guys are more tick boxing exercises. Basically, they want to make sure everything is clean, everything is understood and very straightforward. We are very happy to look at all the, I don't want to call it hairy situations, but the more complex end of the investment spectrum, right? Imagine a company had a very strong start, they had a seed investment round, and then their second most important backer decides, for whatever reason that happens to them outside of the startup itself, that they can't back the startup anymore. So now in their Series A, they stumble, for example, because one of the backers is gone. Right, and then it lands on our desk, basically, right? And we like the business, we understand the traction, and then we get involved. This is just an example, right?
I like that example because there's a lot of those examples as of late in the VC winter era, where a lot of VCs are pulling back some of their capital. Some startups are really challenged at the moment, maybe overvalued at some time, and now they're looking for investors that aren't going to devalue them too much, but help them grow to the next stage.
Right. Exactly, and that's an example. That's a good example. Like you said, that we love these kind of situations because it's obviously not a problem within the business that you're investing in, but more on the cap table. Which means if you solve the cap table, then you've solved the impediment that the business is currently facing, basically, right?
So for founders out there listening that are like, Muhammed sounds like an interesting investor, tell us what's on NOIA's diligence checklist, and what are the qualities you're looking for a founder that you want to work with?
So the most important diligence checklist that I would say we have is that not only do we have to like the business, everybody that invests needs to like the business, right? They need to be able to understand the business. They need to be able to grow. The business needs to be able to grow on them, basically, right? That this is something they want to back. But for us, one of the most important criteria as well is that we like the individuals, because we're a small team. We're only 10 of us. We have 2 main offices, Brussels and Dubai, basically. Our headquarters are here in Dubai, basically. So, when you are a small firm and you don't need to do deals because you don't have a VC type period of 3-year investment period, 7-year harvesting period, and then return of funds. We're a family office. We could keep an investment for 20 years if we wanted to, basically. There is no pressure on us to do either way. We just want to work with good people, basically. And for us, the most important thing is that you have a very clear alignment between the founder and the business itself. So it's very difficult for us to back founders that are jumping around, that are doing this as a part-time, this investment, and then they have done another investment on the side, or we kind of realize that they're on multiple other boards doing other stuff, etc., which kind of seems to be also a bit like the time of what is it called, the jour of the day, basically, that people try to do these kind of things. We don't like that, because we don't believe everybody is like an Elon that can manage more than one entity in one go. We find it extremely difficult, actually. So that's why we're more looking for those founders that we get along with, that are so passionate about their business that they don't do anything else except that business, basically.
I love that. 100% commitment.
Yes, exactly.
You've also written and engaged publicly on the topic of Bitcoin, crypto, and DeFi. I wanted to end on this because there's not many investors, and especially more traditional investors like you, that would openly say that they're really actively investing in this space and that they see a future here. Tell me a little bit about your passion for this, and are you finding a lot of these projects to invest in here in Dubai?
Okay, so there is, you need to understand, I want to explain the connection to this, to the TradFi side. So my interest in Bitcoin and cryptocurrencies, but mostly Bitcoin, emerged in 2015, 2016, while I was still at Carmignac. If you remember back then, around $18 trillion of capital was trading at negative interest rates. So the bond market was trading at negative interest rates. So let's just let that sink in, which means you were giving money to the German government, right? So the German government was borrowing money from you, and then you were the one paying the German government again to actually take your money, basically, because it's negative interest rates. Instead, normally, when I come to you and say, Erica, I need $100, can you please lend me $100? You'll borrow me $100, and then I will pay you whatever the interest on that $100 supposed to be. So I would pay you, let's say, 2% interest, and then 1 year later, I need to give you 102 back, basically, right? In this case, not only was I taking $100 from you, but now you were paying me another $2 every year for me to keep your $100. That was the illogicalness of the bond market. That's how overvalued the bond market was in 2016. And it wasn't one bond or 2 bonds. It was $18 trillion of bonds, basically, that were negative. So when I saw that, I said, there is something wrong with this system. You can't have a bond market this dysfunctional that then trickles down to the equity market. There has to be, I need to look at other investment opportunities. That's how I started going down the rabbit hole, and that's how I found Bitcoin, the white paper, and Satoshi Nakamoto that basically had come out in the midst of the global financial crisis in 2009 with basically an alternative system, right, of sound money. I don't know how much you know about economics, but you basically divide it into Austrian School of Economics or Keynesian school. One is the fiat system that we are in right now, and the other one is the Austrian school that argues for sound money, which means the money is not controlled by the state. So it's separated. Decentralized, right? Like gold was back in the days, basically. So money was gold and nobody could print it, right? So that's really the logic behind Bitcoin, basically. So I got really, really interested into it. So I would consider myself an Austrian economist now, and not an Austrian economist, but a supporter of the Austrian economic idea, basically. And I believe the world needs sound money, and we believe it's going to continue to grow. Bitcoin is going to continue to grow because I think more and more people are realizing the issues with the overall system. And in the grand scheme of humanity of 5,000 years, it's only 100 years old, basically, the fiat system. It's just that we were born into that system, that we don't know anything else, basically. So that's an area I'm extremely interested in. And yes, to your question, there is so many companies and so many founders now that are within the cryptocurrency DeFi space that are now working out of Dubai. And why was it like that? Because again, Dubai did it right. They realized they are English speaking, they are safe, and they have tax advantages. So they attracted every single founder that wanted to build up a global business. And that's why what's happening now is, whereas in the first phase, you only had the local champions of the global businesses being founded here, you now have global businesses, global champions being founded here, basically, right? So, I mean, there's multiple businesses we've invested in and others that are now global businesses that are being built out of Dubai. And that's then gets really exciting, because then you basically have a mini Silicon Valley that is being built here, and a mini Mumbai and a mini everything else, basically.
Bangalore and
exactly.
Singapore.
You know, you name it, that is being built here, right?
Yeah,
And
that's absolutely, I think, the vision of Dubai, right? They don't want to build the next Facebook or Google. They want to build the next version of that. And they see that being crypto being one of those spaces, the metaverse being one of these spaces. And you look at all of the strategies that the government has drawn up here, and it's quite remarkable.
100%.
Mohammed, thank you so much for your time today. I really enjoyed talking to you, and I'm going to really enjoy keeping an eye on NOIA Capital.
Thank you very much. It's a pleasure being here. Thank you for having me.
If you enjoyed this content, continue listening or watching to future episodes where we speak to many of Dubai's startup founders, investors, and digital economy and startup ecosystem enablers. Also, the Dubai Chamber of Digital Economy has published an annual startup guide to help answer any questions you may have on how to register and start a company in Dubai. Download the guide now at the Dubai Chamber of Digital Economy website.